The third problem in this chapter is also a petty cash question. And I see here that Accra company uses an impressed petty cash fund. Impressed fund is the same as petty cash. The fund is established on March 1st with a balance of $100. So the journal entry on March 1st is again to debit petty cash and credit cash. We go down, get $100 from the bank, we write a check out, and we take it and we give it to one of our employees to spend as needed within the business. Then it tells us that during March, the following petty cash receipts were found in the petty cash box. That is, certain amounts were spent throughout the month. And we see that we have a receipt on the 5th of March for stamps, $35. And then we have on the 7th, freight out. Now, freight out is different than freight in. Freight out, another term would be delivery expense. On the 9th, we have a miscellaneous item of $12. On the 11th, travel expense of $24. And on the 14th, a miscellaneous expense of $5. If you were to take the 35, the 19, the 12, the 24, and the 5, and add those up, we would get $95. Now, there are $100. So if we have $95 of receipts and we had a total of $100, we would expect to have $5 in the petty cash fund at this point in time. Let's take a look. It says the fund was replenished on March 15th when the fund contained $2. Now, we would have expected 5, but there's only 2. What does that tell you? I'm short $3. So on the 15th, I'm going to go through these items and I'm going to journalize them. The stamps, postage expense. The freight out, not inventory, but delivery expense. Freight in would be inventory. Freight out is a delivery expense. Then I have some miscellaneous expenses. Now, there are 2 of them here, 12 and 5. 12 and 5 is 17. There was a travel expense of 24. And lo and behold, as we've already said, cash over and cash short, I'm short $3. So I add these up, and that adds up to $98. There were $2 already in the petty cash fund. To get it back up to 100, I need to reimburse it for 98. I go in and I make a check. Now again, remember, there is no credit to petty cash because there's only a debit to petty cash or a credit to petty cash when you establish it, when you increase it, or when you decrease it. Never ever when you replenish it. No entry to petty cash when you replenish it. The problem goes on. It says on the 20th, the fund amount was increased to 150. This is a time when you're going to be debiting petty cash. Why? You're going to be going down, taking a check, and you're going to be increasing the fund from 100 to 150. That's an increase of $50. So we debit petty cash by 50 and credit cash because we're taking money out of our regular checking account. All right, so you will need to know how to do a petty cash establishment, reimbursement, and increasing it. Now, let's ask ourselves, if we were decreasing the fund by $50, how would this journal entry here on the 20th change? Well, what it would happen is we would be taking money out of petty cash and putting it back in our regular checking account. So we'd be crediting cash, and we would be, debit cash, and we would be crediting petty cash, decreasing the petty cash fund.